Only 2 days into the new year and already the Forex markets are abuzz with news events which could shape currency markets for 2013. I'm joined on the phone now by FX strategist Kara Ordway. Kara, if we look back over a spate of bank holidays and closed market days, what, if any, were the big FX movements over the festive period?
Well, certainly the festive period, as it has done in the past, has created a very choppy atmosphere with very low volume and low liquidity going through the FX markets, and that was no different this time. But certainly the big mover over the festive period was definitely the yen crosses. So we had the Bank of Japan election running up to this festive period when Abe was elected once again to be Prime Minister of Japan. But during this time, the Japanese cabinet was appointed and the 2% inflation target, which was previously thought to be the level that they were going to announce, was announced. And some poor CPI numbers, so some negative CPI numbers were also announced prior to the Christmas holiday. So this created a lot of yen weakness against both the US dollar and the euro and the Australian dollar and most of the crosses across the board. So certainly this was the big mover. We saw dollar yen move from around the 84.22 level up to the 87.30 level that we saw traded today. So certainly some big volatility when really not a lot of volumes going through in the market and creating heightened moves for this period.
After 17 months of negotiations, US Congress has approved a fiscal cliff deal. Despite missing the formal deadline, the bill, which averts tax increases for the middle classes and also halts huge spending cuts, was approved 257 votes to 167. What is all of this doing to the US dollar?
Well, certainly today, coming out of the announcement from the US regarding this fiscal cliff agreement, there has been a significant amount of volatility in the market. And when you consider we are on 5-year lows in terms of volatility, this has been a very big break for those who are day traders and are looking for volatility in the FX market. So today we've seen euro back above 133. We've seen Aussie dollar bouncing around. It's now trading around the 104.75 mark. And certainly, as I said before, a lot of volatility in the yen crosses, where many traders are looking to trade out of their safe havens like the US dollar, like the Japanese yen, and buy into these more risky currencies like the Australian dollar and like the euro. So certainly some positive sentiment going through the markets today. Whether this will last, it's been very much of buy the rumour, sell the fact in the past. So certainly we may see some more consolidation going into the European and US session as this news settles through the markets, and some of this risk and positive news may have some pullback in those risk pairs like the Australian dollar against the US dollar. But certainly for the moment it's looking good. There will be some further volatility once those spending decisions are rediscussed in 2 months' time, but certainly at the moment creating the very much needed volatility for those day traders and creating some good risk sentiment across the board.
You mentioned there the euro, and on the other side of the pond, euro area nations entered the new year with a bang. As it emerged, Italian and Portuguese bonds rallied in 2012 as euro area government securities had their best year on record. While naturally there are still concerns for the region, Italy and Germany's 2013 elections, for example, many are now considering the crisis to be easing. Can we expect a positive year for the single currency?
Well, it seems at the moment there are two very different camps in terms of where they think euro is going to be throughout 2013. Certainly the amount of shorts in the market, so traders going short the euro against other currencies, is still on record highs, and that has been the case for some time now. But really there's the other camp now that are saying that the European crisis has moved out of its danger zone. Things are starting to look better, and even if we have some fairly serious news, it's really not looking like the European central zone is going to fall apart anytime soon. So certainly those traders in those camps are looking for the euro to be 135 really in the short term now, and looking to the 141s, 147 even by the end of the year. So certainly some difference in views, but really at the moment, as I said, with this type of volatility, the range that we could see in euro could be fairly big, and we could see it back below the 130 mark if we do see consolidation in the market. But certainly longer term, as I said, those shorts that we are seeing in the market could easily be squeezed out, and we could see it push past that 135 level really in the medium term.
In your view then, Kara, which currencies will be the winners and losers of 2013?
Well, certainly the big currency talk of 2012 has been the Australian dollar. It even got to the point where people were suggesting that the World Bank should put it on its safe havens list because it had been so strong throughout the year. So certainly I think that this will continue into 2013. If we have a look at the year just gone past, we had this European crisis, we had commodity prices falling off, and we've had some fairly significant rate cuts by the RBA, and yet the Australian dollar, amongst its AAA rating in the domestic economy, has managed to stay very, very high. So certainly we are expecting this to continue into 2013 as we see better trade numbers coming out of China. The whole Asian economic region looks to be in better shape, and we see the US Fed continue its unlimited quantitative easing 3. Certainly that will have very positive effects for the Australian dollar. The only thing that we would look out for is this double-speed economy that's likely to come to a head, as we say, in sort of mid-2013. That's really the only thing at the moment, combined with further rate cuts from the RBA, which are expected to look around 2% for the overnight rate by the end of 2013. That's really the only things that could bring that rate down significantly at the moment. But really, as I said, looking at 2012, it really could repeat itself, and we could see it push past this 106.24 high that we saw in September 2012 and see it go higher beyond that in 2013. But really what everyone has been talking about in terms of the big trade for 2013 is definitely the yen. We've seen a significant start to this trade. If you were, everyone's been calling for this move and this yen weakness for some time now. RBA has done a very good job of convincing the market that he is committed to negative interest rates and flooding the market with yen, all those asset purchases. So certainly, if he follows through on his promise and he does have this 2% inflation target in place, then certainly the yen could weaken a lot further. And many traders are now looking at dollar yen to look at 90, even in the short term, and then really going on from that back up to 100 if all goes well in terms of the Bank of Japan's plan. So not looking good for the yen, but looking very good for the Australian dollar.
Dukascopy TV viewers are always looking to remain a step ahead of the markets and seek the alternative trade. Which emerging market currency is likely to have that edge this year?
Well, we're actually looking at the Malaysian ringgit. That region has had very steady economic growth now for some time. They do have a lot of room to move in terms of monetary policy. Their rates are at 3%. And inflation is looking like it's going to go above 2% next year, so there is even the possibility that we do see rate hikes for that region in 2013. So certainly there's high investments in the area, and the whole region as a whole is doing very well. So looking towards the end of the year, around the 2.93 mark would be the target for the Malaysian ringgit.
Kara, thank you. The Dukascopy TV team will be keeping you updated on all of the very latest financial news. For now though, goodbye.